You want to buy some gold and silver because inflation is ruining your savings, but you can't decide which one is best. Gold seems really expensive. I could buy a nice car with these little coins. Silver is affordable, but I hear it comes with high premiums. Then there are all these different sizes of coins and bars. Where do you start? Coming up are 10 steps to help you choose which silver and gold bullion are best for you. Hello everyone and welcome back to Sound Money Stacking. So you've decided to invest in silver or gold. Maybe you've received a lump sum and you want to protect it, or you just want to make a start by buying a little each month. Whatever your situation is, I will guide you through 10 steps that will help you decide which silver and gold products work best for your situation and where the best value is. So let's get started. I hope this is obvious to you, but it's always prudent to try and get your finances in order before starting any new investment. Specifically, focus on any excess funds you have and use them on paying down high interest debt. Clear your credit cards, your store cards, and any expensive personal loans first. Make sure you've got the best deals on any long-term mortgages and car loans. Please do not take out personal loans or load up credit cards to go and buy silver and gold because some influencer on the internet said it's going to the moon. Only invest what you can afford and don't gamble with your daily needs. If you're making a start by just putting a bit of your monthly income aside to build a stack, then your search obviously focuses on looking at small sizes. Your issue will be trying to avoid high premiums and the higher cost of purchase for every ounce of silver or every gram of gold that you buy. If you've got a lump sum to protect, then you may have more options with lower premiums. However, you also face the issue of safe storage, which I'll cover later. You also need to think about how to allocate your investment into different pots. One thing to consider early in your stacking journey is your intentions for stacking. I split my stack into 3 pots. First is the deep stack. This is what you intend to hold for years. It might be your pension, your family's inheritance, or your savings for a future event like a house purchase, a wedding, or children going to university, for example. You don't mess with the deep stack. You don't trade in and out of your deep stack, and you don't spend it on short-term lifestyle. A deep stack is made up of the cheapest cost per ounce silver or gold. You want low premiums and no sales tax if possible, and certainly no capital gains tax when you come to sell a large lump sum. A deep stack might be very valuable, so storing safely is paramount in your mind. You might choose vaulted storage, and this might be overseas for tax purposes. My next pot is the liquid stack. It's similar to the deep stack in that it's also cheap, boring, tax-free bullion. The difference is that it's something that you keep close to you, so you can sell it quickly if you need to raise some cash for something. You might even use this stack to trade for more desirable collectible items in the future. The liquid stack is effectively a replacement for easy access bank account savings. You focus on silver and gold pieces that you can liquidate easily, so it's made up of smaller sizes of popular trusted government bullion. The final pot is the collection pot. If you're a new investor, you probably think that you've got no interest in collecting. I was like that. I've never had the urge to collect anything in my life. However, as you build your liquid stack, you do end up buying a variety of different pieces of bullion as and when good deals present themselves to you, and you start to take an interest in the artistry and designs of premium bullion. And then you realise from studying the secondary marketplaces that you can recover these premiums that you pay for these items. You start collecting all the coins in a series to keep your interest going in stacking, and it can become quite addictive. And then you also become interested in poured silver pieces, antique pieces, and numismatic coins with all of that history that's attached to them. There's absolutely nothing wrong with collecting, of course. It's fun, it's very motivating. But just make sure that your decisions are compatible with your investment goals. Can you liquidate your collection for a good price if life means that you need to? What is your investment timeline and goals? I've already described the concept of a deep versus a liquid stack. What's not always clear is that investing in precious metals really pays off if you hold on to your metals for several years. And that's because you need to recover the cost of the premiums, shipping, and storage of your physical metal. There'll be periods in the coming years where precious metals prices do change very quickly, probably upwards, but in general it's just not worth trading in and out of metals just to make a quick buck. If your timeline is short, like a few months, then maybe don't invest too much and only buy at a low premium. Just take it easy. You must be able to calculate what the premiums are when you're buying and selling silver and gold. Unfortunately, almost nobody states the premiums to you when you buy, and I'll explain why. So, firstly, the market price of silver and gold changes every minute during trading hours. These hours in UK time are from 11 PM on a Sunday night through till 10 PM on a Friday evening, with 1 hour break each day from 10 until 11 PM. The market price is known as the on-the-spot price, or spot for short. This price is set by the London Bullion Market Association, LBMA, in London, and it's referred to globally. Spot is the price that the 11 so-called market maker banks that are members of the LBMA charge each other for physical delivery of the huge London good delivery bars that are held in their vaults. These are an average size of 1,000 ounces for silver and 400 ounces for gold. Obviously, you will not be buying these bars like this, and you will not get spot prices. People get confused. You will not get spot prices when you buy gold and silver. The spot price is the baseline price for silver and the gold industry. Government mints and large dealers will all have live pricing of their products that dynamically adjusts with the underlying spot price throughout the day. They often have a page showing the spot price on their websites. So you do need to know what the current spot price is when you're buying silver and gold, so you can work out in your head what the current premium is. So, why is there a premium, I hear you ask? There tends to be a lot of questions from newcomers to precious metals as to why you just can't buy some coins and bars at the spot price. Well, the heavy metal bars in the market vaults are not for the final consumer product. A mint needs to melt, assay, and sometimes refine the metal they buy in. The refining of silver to 3.9 purity, which is 99.9% purity, is particularly laborious, so the premiums for silver in particular are higher than what you would find for gold. The mint then manufactures the bar or coin that you're buying. Consider the staff costs, equipment costs, and the costs of leasing and insuring the metal from the time a mint acquires it to the point that they can sell the product to you. Higher mintages means less tooling, less downtime, economies of scale, and so you end up getting lower premiums on those high mintage coins. Lower mintages of exclusive collectibles mean higher premiums. Higher quality coins, such as proof finish coins and high relief coins, are struck multiple times and manually inspected for perfection before sale. The extra time and quality control wastage means that higher premiums for these collectible coin pieces. Artisan cast and poured silver pieces also have higher premiums as they have very low mintages and no economies of scale. And then to all of that, you've got to add the costs of hedging the metal price fluctuation, insurance, marketing, and shipping at both the wholesale and retail levels for each bullion product. This is no different from any other product we buy, though costs added all the way through the process. But the high value of precious metals and the varying spot price adds more costs and risks to everyone involved in the chain. Finally, add any postage costs to you when you're buying online. Each step adds to the premium. You need to consider this when deciding what to purchase. Now, an additional and opaque variable is the extra premium added by the retail dealer for their profit margin. Unfortunately, almost all dealers and private sellers do not disclose the premiums that they charge, and you have to work them out for yourself. The bullion dealer charge is an exception. It does disclose the percentage premium on their most popular product pages. This is best practice, and I do wish all dealers met this standard so we could make easier comparisons between sellers. To calculate the premium yourself, take the final price of the coin or bar that you pay. This includes the delivery cost, so the cost to get it in your hands, and divide that by the number of ounces or grams in a coin or bar, and then divide that by the current spot price in ounces or grams. Here are a couple of examples from the Royal Mint. A 1 ounce 2026 Silver Britannia costs £64.26 delivered. The current spot price at the time of looking at this site is £38.25. The price divided by spot shows that the Royal Mint is charging a 68% premium for this high mintage standard bullion coin. This premium is very high and a bad deal. You should be looking for about a 25% premium or lower for this coin in current UK market conditions, and we all wish premiums were even cheaper than that. A 2026 gold sovereign is £788.82 delivered. The current spot price is £3,108.03. There are 0.235 troy ounces of pure gold in a full-size sovereign. So the premium is 788.82 divided by 0.235, and then the answer of that divided by 3,108.03. And that comes out as an 8% premium. This premium is also on the high side. You should be looking at a 4% premium for a new sovereign in current market conditions. See my previous videos in the how-to playlist on my channel to find the best deals. Then we have the controversial consumption taxes like the UK's value added tax, VAT. Almost all countries exempt gold bullion from sales tax, and this includes the UK. This is a big reason to choose gold over silver. Bullion gold is defined as investment coins or bars that are made from at least 90% pure gold. Silver, however, is subject to sales tax in most European countries. In the UK, a VAT of 20% applies to all new silver bullion. Controversially, this also includes the UK government legal tender bullion coins from the Royal Mint, like the Britannia. A big reason to purchase silver, however, is that it's got a much cheaper entry price point than gold. But you do need to factor in recovering the premiums in your investment strategy. Note that the sale of pre-owned silver bullion is exempt from VAT in the UK. Most countries apply some form of capital gains tax when selling gold and silver bullion. However, there may be exceptions, so check your country's current regulations, and these tend to change over time. In the UK, any profits from gold and silver bullion sales are subject to capital gains tax, or CGT, just like many other assets. Check what the rate is for your income bracket and what annual personal allowance you may have. There are some silver and gold bullion coins that are exempt from capital gains tax in the UK. Any Royal Mint bullion coin carrying a pound denomination and the monarch's portrait called an effigy is legal tender, and these are capital gains tax exempt. For gold, this includes the Britannia and Sovereign full-size and fractional series, plus many other collectible coins, such as the recent Queen's Beasts and Tudor Beast series, and all the proof coins. Check the websites of large bullion dealers to see which coins are capital gains tax free. Gold bars are subject to capital gains tax. For silver, the Britannia and its fractional sizes, plus a wide range of collectible coins and proof coins that are made by the Royal Mint, are also legal tender, and these are capital gains tax exempt. A lot of emphasis is placed on Britannias by new UK buyers for this reason, and this can actually drive up the premiums of Britannias during periods of high demand for silver. Please consider other capital gains tax-free coins which can have lower premiums during these periods of high demand, so do shop wisely. Remember to keep records of all your purchases so you can calculate any capital gains. The cost of selling bullion must be factored into your thinking of what to buy. This is especially the case for silver. You will find that premiums of pre-owned silver bullion do in part include the VAT that was originally paid. Depending on whether you sell peer-to-peer or to a bullion dealer or pawn shop, you will recover all or none of the premium. I will make a full video about selling soon, but it would be remiss of me not to cover it briefly now because it does affect your plans for your stacking. Most people in the UK sell silver and gold collections to jewellers, pawn shops or an auction house. That is because these are inherited collections and the beneficiaries do not know much about precious metals. They are ripped off by the industry. This is another reason why I make these videos. From my research, I understand that some jewellers may pay up to 95% of the spot value for gold and silver bullion that are in a very good resaleable condition. But you can forget about getting back any of the premiums that are paid. Some of the worst out there might say that they can only offer a scrap value for your bullion, and this would be something like 60% of the spot value. You will only get between 40 and 60% of the spot value at pawn shops. And then when you look at auction houses, they charge a buyer's premium fee of usually around 25%. So the buyer will only buy up to the known spot value of an item, maybe minus the fee. Again, you can forget about reclaiming any premium. And then there's a 25% or so seller's premium that's charged by the auction house to you. So you can see that neither of these are a good way to go about selling bullion. Large bullion dealers will offer you close to full spot price, but you won't get back any premiums. If you do use a peer-to-peer marketplace like Stackers Social, the Silver Forum or eBay, you will be able to recover these premiums for your silver and gold. Look at my previous video, number 8, for a fuller description of these marketplaces. You have to bear in mind that most of the buyers here are interested in silver and fractional gold. For silver, you will find at the moment that there's a lot of buyers for 1-ounce silver coins and bars, and there are quite a few buyers presently for 10-ounce bars and 500-gram bars. But there'll be a lot fewer buyers out there that have the budgets for 1 kilogram bars. With silver prices expected to rise considerably in the coming years, there will be fewer and fewer buyers looking at these larger sized bars. So are they really the best thing to stack? For gold, there are many buyers for fractional gold bars, such as 5 grams in weight and below, and quite a few buyers for sovereigns, which are 7.32 grams. There aren't many with budgets for Britannias. The reason I get into this is because you need to project where you think the market will be when you come to sell. There's no point buying lots of big silver bars, for example, that would have a low purchase premium, so are very attractive to buy, but if you can only sell them to a dealer, because they're the only customers really that can afford to buy it, and you're only going to get just below spot price for it, then you actually would have been better off buying tubes of capital gains tax-free Britannias, for example, and selling them with a fair premium to a larger group of buyers. Do you buy silver or do you buy gold? And if you buy both, how much of each should you buy? What's the ideal ratio? Well, this is largely answered by you going through the thought process that I've outlined previously in this video. Don't worry about having all the answers from the start. Take it easy, buy a portion of what you're interested in, gain experience and confidence, and then you can modify your strategy as you go. In addition to the differences in premiums and taxation that I've discussed, the gold-silver ratio should be considered when investing in precious metals over the long term. The gold-silver ratio refers to how many ounces of silver you can buy for the same value as what it costs to get 1 ounce of gold, and that's usually calculated in US dollar values. The ratio is currently 81 ounces of silver can be bought for the same value as 1 ounce of gold. The historical average is 55, so the current ratio means that silver is relatively cheap. If you consider all of your precious metals as one total investment, then it's currently a good time to buy more silver. This relative affordability of silver offsets the higher premiums that you pay when you buy it at the moment in the UK. A gold-silver ratio chart shows some interesting patterns that you can correlate with economic cycles. This chart here shows how the gold-silver ratio varies quite a lot over time. The ratio each month since the year 2000 is shown here as a vertical bar. Taller bars just mean that this ratio changed a lot in that month compared to other months. The green bars mean that the ratio was trending upwards, which means that gold was getting more expensive relative to silver in those months. Red bars means that silver was getting more expensive relative to gold. So if we look at 2025 on the right hand side of the chart here, we can see that the ratio has been very high and was over 100 in May. However, it started to fall and we appear to have entered a period where silver is outperforming gold. Silver does tend to outperform gold after our global financial crisis period. It happened after the year 2000 dot-com bubble collapse, the financial crisis in 2008 and 9, and the 2020s lockdown. Precious metals experts forecast silver to considerably outperform gold over the next few years for a whole variety of reasons, and I'll get into that in future videos. If the ratio goes down from 80 today to say 40 or so in the next 2 or 3 years, then you'll be able to swap your silver deep stack for twice as many ounces of gold than that you can afford to pay for today. And this is something that long-term stackers of silver think about a lot. In this section, I compare the different premiums you pay on different sizes of silver and gold. For this exercise, I've focused on only the UK bullion dealer Chards, as they sell a wide range of products, and I wanted to avoid confusing the variation in premiums between different dealers and private sellers with the variations in sizes of silver and gold. Please note that you'll be able to find better premiums for many of these sizes by shopping around, especially buying pre-owned bullion on the secondary market. This is especially the case for silver and fractional gold. See my video number 8 on my channel for finding the very best deals. But what this comparison does do is show you how premiums change with the size of product, and it's really important to get familiar with this concept. For silver, we can see that 1 ounce coins have got the lowest premiums, whether you're buying one coin or boxes full of them. Premiums do vary a lot for this size because there's a mix of high mintage, standard bullion rounds, through to premium coins and through to low mintage collectible coins. This is the size where the value is when you're stacking silver. Fractional coins, lower than 1 ounce of silver, are very popular gifts for children, especially at Christmas time, but they are expensive, so I wouldn't stack them. By all means get them and get kids excited about silver, but I wouldn't stack them in large numbers. Large coins, such as the 10 ounce size or 1 kilo, do come with a higher premium, but they can actually be quite a smart buy if you choose the right designs. The mintages are small and the premiums do grow over time as they are collectible, and they're very beautiful too. 1 ounce and 10 ounce are the most popular bar sizes. There are a lot of premium 1 ounce bars that are becoming popular collectibles in recent years. For large weight stacking, you will find that premiums are lowest on the 500 gram and the 1 kilo bars. But again, I do prefer having tubes of coins. For gold, we can see a wide array of product types. 1 ounce government coins, including the Britannia, have the very best value, the lowest premiums. Full-size sovereigns also have low premiums thanks to their high mintage. For fractional sizes, the best value is found in the 0.1 ounce Britannias, but they're often out of stock. And you can find good premiums in 5 gram bars. 1 gram bars are very popular because they're more affordable to people on a regular basis, but you will need to shop around to find the best possible premiums as they can get quite high for 1 gram bars. So what bullion products do I recommend you consider focusing on? For lower budget regular stacking, it's clear that 1 ounce coins and bars offer the best value for silver. There's a lot of choice and there's a very strong secondary market. There are many capital gains tax-free options in the UK. It's better to stack these rather than save up for bigger bars or coins for your main stack. For gold, there is a lot of choice of fractional sizes to help you get into the market. Bars from reputable mints that are factory sealed have a better resale value than loose bars. 1 gram bars are popular and it's probably the best starting level for stacking gold. But do shop around. For example, I found that Tavex in the UK is a particularly competitive dealer for fractional gold. Smaller fractions come with a higher premium, so it may make sense not to go any smaller than 1 gram for regular stacking. For medium budget stack building, you will find that multiples of 1 ounce silver coins or bars offer the best value. You can buy tubes of 25 coins, for example, to get bulk pricing and easier storage. If you can, keep them in factory sealed condition and you'll get a better collector's premium when you come to sell them. 10 ounce coins also offer relatively good value because the premiums tend to increase with their collectability over time and the mintages are low. Capital gains tax-free options are available for 10 ounce coins too. Focus on collectible series or dated government coins, things that people will want to collect a set of. Larger bars, especially the popular 500 gram and 1 kilo sizes, offer good premiums, but they're all subject to capital gains tax when you sell. Consider antique bars if you can stack for a long time, because these do grow in collectible value. They're really beautiful. For gold, half sovereigns and full sovereigns offer better value than bars of similar sizes. The new 2026 half and full size sovereigns come with visible security features. So this now really negates the need to go and buy higher premium carded bars to achieve the full buyer confidence when you sell them. I recommend focusing on these. The very best value comes with the 1 ounce coins, of which there are many recognised and trusted government minted coins. The UK Britannia coins have multiple visible security features since 2021, and these are too hard to fake. Fractional Britannias have a higher premium than sovereigns, and these make less sense since the 2026 sovereign security update. As a reminder, sovereigns and Britannias are VAT free on purchase and capital gains tax free upon sale. For larger budgets, such as lump sum investments, I recommend the same items that I've discussed for medium budgets. The safe storage and insurance of a large value and the volume in the case of silver may become an issue. Look at vaulted storage options with dealers like Chards or services like Bullion Vault. Consider VAT-free options that are vaulted in Switzerland. There's a decision to be made between achieving the very best value when you buy them and how much counterparty risk you're prepared to accept. You may want to consider large format bars and vaulted storage if you can achieve really good premiums that actually beat having tubes or boxes of 1 ounce coins. So, to conclude the main points of this video, the 10 steps that I've outlined will help you choose how much silver or gold you want to stack. Once you've decided on which size products you want to purchase, you're going to need to do your own searches for the best prices. This is the 3rd video in my series about buying silver and gold bullion. Check out the how-to playlist on my channel homepage. The first guides you through buying for the very first time. The second guides you through the best places to buy at the cheapest prices. The market changes considerably every week. Availability, premiums and spot prices are always on the move. Unfortunately, there are no good price comparison sites that I can recommend to you. The ones that I've found out there give inaccurate information. The best deals are on the secondary market, on peer-to-peer marketplaces like Stackers Social and the Silver Forum. The best offers do get bought up very quickly. Well, that concludes the video. That's 10 steps to help you choose which silver and gold bullion are best for you. Everybody's situation is different. Nobody can or should be telling you what to do. But you can now follow these steps to figure out what's the best path for you. The good news is that there are plenty of silver and gold products on the market that are designed to match your individual needs. This has been a lot of information, so I strongly recommend saving this video to watch later. Let me know what you prefer to stack in the comments. Also, feel free to ask any questions there and I will answer them. Thank you for watching. Do subscribe if you haven't already. It's free and I'll bring you more information, inspiration and entertainment. See you in the next video.